So what I want to talk about today is your input back to me. And, you know, Rip made a comment when he came in. He says, man, what are you going to do to stop this bleeding? We're talking about interest rates, obviously. They're going up. So when you have a buyer who says something to you, or a seller who's going to be buying, and they say, what is going on with interest rates? What do you say to them? I'm curious.
Call Chairman Powell.
2 years ago.
Call who?
Call
Chairman
Chairman
Powell?
Powell.
Call Chairman Powell? Okay, I like that one.
You should have bought 2 years ago when I told you so.
Should have bought 2 years ago when I told you so. Yes, I like that one a lot. Come on, what do you say to people?
I'm new, so I don't know.
You're not sure. Okay, so we're going to give you some information today. What do you say?
Don't panic, they're still historically low.
I wouldn't, at this point, I wouldn't say they're at historically low
Still
now.
lower than what they were though, right?
Well, it's lower than it was
2016.
a long time ago, but it's not as low as it was. I mean, the rates are pushing 5%.
Isn't
And
it higher
even-
than 2019? What was it?
2019, we were in the high fours, and high fours, low fives, depending on your credit score. But you can go back a few years, and you can, like 2017, interest rates had gone up, and then they came back down a little bit, and they just keep doing that.
We need to not let them stick around anymore. We need
But
to
what?
get them
Okay,
to
so but now think about this: a buyer or a seller says to you, "Why are interest rates doing this? I mean, what's going on?" What do you say to them? I mean, seriously, what do you say to them? Rip, what do you say?
Tell them that the 10-year T-bill has direct effect on the interest rates, and that Powell hiked them up a couple times on Monday and is going to continue to do so until inflation kind of calms down.
Okay. What else do you say? I mean, okay. Let me get, the reason I want to bring this up is because, to me anyway, you know, I want to be as much as possible. I have to do the same thing with you and with my clients as you have to do with your potential clients. Same thing. We want to become their trusted advisor. Isn't that right? Isn't that what we want to do? So in order to do that, we have to have some things in place that make us sound like we know what we're doing. I mean, we hope so anyway. So, you know, it's somewhat important that we can at least speak with, we don't have to be exact. We don't have to get into all the technical stuff. I got an email over the weekend from the gentleman who's our chief financial officer, and he runs our secondary department also. And he wrote this thing, and I'm reading this and I'm thinking, oh my gosh. I mean, he tried to make it Cliff Notes version of another note, and it was still like way over here. I mean, it's like, okay, Matt, just, we're not all gonna get this, okay? That's okay though. But how can you have some information that you can give to people that's going to explain to them what is going on with interest rates? Well, first thing is what Rip said is almost the case. He said that the 10-year Treasury bill is the trend line. The yield of the 10-year Treasury is the trend line for long-term interest rates. That is exactly correct. So if you look at the U.S. 10-year Treasury note and you look at that, you look at the trend line, which direction is it going? That's what's happening with interest rates. It just follows that trend line. That part's correct. Now, the part where I said he's somewhat right, because that he was right on target on that one. The other thing is, short-term interest rate hikes, like Chairman Powell and all of his counterparts have said, is that they're going to start raising rates this year, and I'll go into why in a moment, and they're going to start raising rates. When they're raising rates, they're raising short-term rates, not long-term rates. So the Fed this year has raised rates a whopping 25 basis points. The Fed rate went, you know, the prime rate went from 3.25 to 3.5. And the Fed rate is now, Fed rate went up a quarter. The Fed rate is the rate the banks pay to borrow money from the Federal Reserve. And that's like at 0, 0.25, 0.5. So that's the rate. But whenever the chairman speaks, he's talking about raising short-term rates. Now, short-term rates are things such as car loans, credit cards, personal loans, things of that nature are HELOCs. They're immediately affected by the short-term rate increase, not necessarily the 10-year Treasury note, because it depends on why they're raising that rate, can have a possible impact on long-term rates. So what's happened is there's been a lot of talk since December that they're going to start raising rates this year because they're fearful that there's going to be more inflation. Well, their fears hit. Our inflation rate's up at 7.9%. So there's a lot of fear. So the Fed says what we have to do is we're going to raise interest rates. We're going to raise short-term interest rates so that we can put a curb on inflation. That's what they want to do. But what's happened, the anticipation from fourth quarter of last year to now is that the inflation is moving substantially faster than what they expected. As a result, they started out at the fourth quarter of last year saying we're going to raise the Fed rate 3 times in 2022. That's what they said they were going to do. Then in February, they said, you know what, we may not do that 3 times, we may do it 6 times this year. Well, what that does is it puts the fear of God in all of the global equity investors. And so what they now do is they start saying, well, wait a minute, once if you're going to do that, that's going to have an impact on the rest, on all of us. And so they start raising, I mean, the Treasury yield starts going up because now they're nervous. They're nervous about inflation. Well, then last week, Monday, 1 week ago today, Chairman Powell, he was at a Senate hearing, and he had to give his little explanation, and he said, well, we're not only going to continue our rate increases as we've said we would, but instead of doing 0.25%, we think we're going to start doing 0.5%. It's not off the table. He said that, and you see the spike on Monday of the 10-year just did this, straight up. Last week we hit 2.55. We haven't seen that since January of 2019 on the yield. So what's happened, the Fed is saying they are going to raise interest rates 6 times this year, and now they're saying we might even raise them as much as 0.5 each time. Here's the interesting thing. Back in December, we were offering rates down in the low 3s, 3%, 3.125%, 3.25%. Now we've got rates 4 3/4, 5, 5 1/4. I quoted somebody this morning, this is no joke, 6 3/4. Now mind you, that person is getting a bank statement loan. He is not getting a normal traditional Fannie Mae loan. But still, when I originally quoted him, that same loan, just a month and a half ago, it was 5%. Now, think about this. The Fed has only raised rates 1/4. That's it. But they've been talking that they're going to have 5 more increases, and they now might raise them as much as 0.5.
So the one on Monday only counts as number 1 of the 6.
That's right.
I didn't realize it's
Well, it's
gone
gonna
on
be
so
that-
Exactly. That's why I'm having this discussion, because when you have people ask about it, they think, the first thing people think is that, well, if Chairman Powell's going to raise rates, and our rates are going to go up. The correlation, the Fed raising the rate may or may not have an impact on long-term rates, but when they talk about raising rates, in this case as much as 150 to 300 basis points in a year, yes, that is going to change what happens with us. So that's why you're seeing interest rates go up, because the global equity markets are so afraid right now of inflation that they have pulled out of securities, and by pulling out of securities, it changes the supply and demand of the treasuries that we sell. And so if the supply is not there, if the demand is not there and the supply is high, yield goes up. So that's what's going on right now. And from my opinion, I think you, all of us, me included, should have some type of brief explanation that you and I can give to people when they ask the question. And even if they don't ask the specific question, if they kind of hint around it, then you and I can ask them a question. Why do you think the interest rates are moving up? Let them give you an answer. And then they're going to say, well, Chairman Powell said he's going to raise, he just raised the rate, so our rate's going to go up. Well, now let's wait a minute. You're right, partially. He's only raised the rate a quarter. Interest rates have gone up almost two full points. That's 200 basis points. He only raised it 25, and we're up 200. Why do you think that is? And they're going to say, well, I didn't realize that. Well, let me help you. Now all of a sudden you become what? Their trusted advisor, because you're giving them information they don't know the answers to. And you don't have to tell them, you ask them. Because I can almost assure you that when you ask them, why do you think interest rates have gone up? And they're going to say, well, the Fed says that they were going to raise the rates. Well, that's partially true. And they said, now, Chairman Powell only raised it a quarter, 25 basis points, all he raised it. But interest rates have gone up almost 2 points. That's 200 basis points. They raised it 25, we went up 200. Why do you think that is? And when you ask them that question, they don't know the answer. At least 99% of the people don't know the answer. Now you can offer some information. It's because of what they said they're going to do in anticipation of what's going to happen and fears of inflation and fears of continued supply problems. Interest rates are being pushed up. Honestly, in my opinion, somewhat artificially. Because we don't need to have rates this high right now. I mean, I don't personally think that we should, but that's what's happened. But yes.
I was going to say, do you think that also reply, if we bring it to our context, it will kind of manipulate the price of homes as well? Because will that kind of affect how prices go? Because
I think that's a great question. I mean, what's going to happen with home prices as this continues to move up? Here, let me give you two just perfect examples, actually 3 perfect examples, very quick. This morning, I was speaking to a person who I did a pre-approval for them back in February, and we gave him a pre-approval with a 5% down payment and at $500,000, no problem. He sends me a note over the weekend and says, Greg, can you push that up to 600? And so I looked at it and I said, you know what, we can go to 600, but let me explain something. That is absolutely the top you can go. And your property taxes, homeowners insurance, HOA cannot exceed this number. He called me up, he said, Greg, but when we did this before, you were saying I might be able to go as high as 650, 700. I said, that was before the interest rates went up. So to answer your question, yes, this guy might have been going out and buying one for 650. He can't buy one for 650 now. He can only buy one at the max 600. And that's example 1. Example 2, this gentleman who I quoted this morning, the bank statement loan at 6.75% interest. Just 2 months ago, I was quoting him 5%. He may not buy the house now. He can afford it, but he may decide not to buy it because that's such a huge difference in payment. So what happens? You're pulling one person out of the market, and if that happens to more than one person, all of a sudden prices will what? They'll get flat. Right. And instead of getting 60 offers on a house over the weekend, you might only get 10 or maybe none. Those are 2 examples. Third example, I was down in Florida this last few days, and yesterday I was meeting with a real estate agent down there, and we're chatting, and the homes in the area that we were just taking some peeks at, they've been selling just about as fast as you can, just like here, about as fast as you put them on the market. Well, they had a place that we were talking about. It's been on the market for 3 weeks, and the agent's name is Gwen. And I said to Gwen, I said, 3 weeks? She said, Greg, it's starting to flatten. And she said, they're not selling in 1 day. So I do think interest rate, I don't think it's going to cause pricing to go down, but I do think it's going to flatten it. And I don't think you're going to see as many offers, especially in certain price ranges, because people don't want to spend that kind of monthly payment. They don't mind spending the money on the house. They want to spend that kind of monthly payment because the interest rates have gone up so much. Does that make sense?
Yes, so I guess we can have a conversation with sellers to let them know, like, your time may be phasing out where you could have all this.
Time to
crazy
act
amount.
is now.
Yeah.
Get it done now. If you're a seller, get it in the market, get it going right now, if you can.
I had a client call this morning, she was thinking 2 months, and because of all that, she's like, hey, can you come over tomorrow, because we need to act quick.
Yeah.
I think some price points will be very hard, like, because right now the average home price here is almost 400,000.
Yes.
And with 6% interest rate, there's a lot of first-time home buyers that would.
Well, it
not
won't be
able
6 for them. No, that's not. Yeah, 5, somewhere in that ballpark.
For a lot of people
Yeah.
to afford those homes. So if you're a seller in this price range, you might
You
want
might.
to sell as soon as
That's right.
possible.
May want to take action a lot sooner. And I think that's really our message right now is, you said it earlier, and I asked the question, what do you say to people? You said, I told you should have bought 2 years ago. Exactly. But they didn't. So now they got to deal with today. And they can deal with today. I mean, it's not like they can't buy a house. They can buy a house. And it's still not terrible. It's just not what it was recently. Does that make sense? Does that help a little bit?
So we need to, when we do have listings, and we're looking at PA letters that are, what's today, Monday, that are more than a week old.
Yeah, if they're 2 weeks old, you need to call the lender and find out,
Can they
is
still
that thing
buy
still
the house?
good?
Yeah.
Yes. Someone from our office here was going to use Ribbon, and Ribbon, I don't know if you're familiar with how they work. I really like them. They're so on top of stuff. At least I think they are anyway. But they always send a note and they say, Greg, can you approve this? And they had the sales price in there. And I had to send them back a note and say, I'm sorry, I can't. Can't do it at that sales price. Because when we originally started this process, their interest rate would have been, oh my gosh, 1.5 lower than where it is right now. And so they can't afford it.
Well, Ribbon's starting to be more cautious too now.
They have to be.
Their cash offers are starting to get a lot
Yeah.
lower. It's
And
like
they-
85% over now.
Yeah, they got to be careful. Everybody does. I think it's just right now, and and I don't want to put any fear of God in anybody because I still think it's a robust, great market. I really do. I just think what we have to do is be conscious of what's going on. And again, for you and I, it simply goes back to what I said before. How can we be that trusted advisor? That's what we want to do. And in a market like this, we've got a phenomenal opportunity to be a trusted advisor. Because your counterparts, maybe in this office it's different, but a lot of real estate agents out there, they have no idea what to say. They have no idea. They don't have this video to go back and look at or come in here and sit in here on Wednesday with Mike. They don't have that. They don't know what to say. They don't know what to do. You've got some of that. So take advantage of it. Any other questions? Yes, ma'am.
Last week, I have a buyer who brought, I guess, an ARM kind
Okay.
of loan. So, and then I guess her motivation was it's a lower payment or something to start up with. Is it like? So I was wondering, is this something that can become common
It was an
as
adjustable
rate go
rate
up? Adjustable
mortgage.
rate, yeah.
What's that?
It was an arm.
Adjust.
Oh, an ARM mortgage, ARM.
I hadn't seen one of those for a long time.
I haven't either. Now, I'm having a hard time. They got an ARM, what size mortgage was it?
But close to 400.
They did an arm on that?
I don't
I was
know.
trying to, so now I'm curious. Like,
I don't
why
think
would
there's-
somebody do that? And is it-
No. I don't see, okay, I'm looking at ARM pricing. The only ARM pricing that's attractive right now is if you're doing a private equity loan, or a jumbo loan. Jumbo loans have got some very, very good ARM products right now. Loans over $647,200, over that. But if you're below that on an ARM and it's just a standard Fannie Mae, Freddie Mac loan, I'm not seeing any ARM pricing out there that's attractive. FHA may have one that's going to be somewhat attractive, maybe, but that's it. No one else. I mean, conforming, it's terrible.
With that jumbo, that's a low amount for a jumbo now. You know what I mean? I
Yeah,
mean, it's like,
right.
When I have a client that says their budget's 450, it's like, okay, this is gonna be tough. So with that jumbo being that, is it better to do a first and a second?
Good question, Rip. You know, it really depends how big that second's going to be. It might be, but you can get pretty good rates right now on jumbo. I mean, I was quoting people jumbo 30-year fixed last week, same price as conforming 30-year fixed.
Okay.
No bump up last week. Now that'll probably adjust a little bit this week, but so jumbo right now is not terrible.
Can you say what he just said in like regular terms? Like what's first, second?
Oh, are you, okay, no, good. Have you heard, okay, maybe we should save this one, well, we got a couple more minutes. All right, have you heard of piggyback loans? You have not, okay. I'll do this very quickly. A piggyback loan is where you get 2 loans at closing rather than 1. Let's say that you're buying a property for $1 million and your minimum down payment is 20%. So that means you're going to get a loan for $800,000. In the past, $800,000 would be a jumbo loan, okay? And in the past, jumbo interest rates were usually 0.25% higher than your conforming interest rates.
And higher down payment.
And require a bigger down payment. So what we would do is we would give them they can put down their 20% or 15%, whatever it was they're going to do, and now they're in a jumbo first mortgage. But in order to keep them out of jumbo, we give them what we call a purchase equity second. It's a fancy name for a purchase HELOC. It's a home equity line of credit for the difference between $647,200 and in this example, $800,000. So roughly $143,000. They get an equity line for that at closing. Now, instead of having a first mortgage of $800 at a jumbo interest rate, now they're getting a first mortgage of $647,200 at conforming interest rates, and we use the HELOC portion to get them pay for that difference. And in a market like today, that's not a terrible idea because your HELOC rates they're going to go up substantially this year. But right now it's low. Right now you might be paying 4.25.
It's a smaller amount.
It's less than, but that's going to change in a year because HELOCs are driven by prime rate, which is all going up this year.
And you can put a little less down on a first and second too, can't you?
You can, depending on the specific product, but yes, you can do 15% down or 10% down and then do a nice big HELOC. Where that gets used a little bit more right now is people who don't want to sell their current house. They have more than enough income to afford 2 mortgages, but they don't want to sell the first house till they find the second one. So what they do is they'll do a piggyback loan, and then when they sell their house, they just pay off the second loan, which they can do. I might spend some time on Monday next week to talk about this again, get into some details and put some numbers up on the board because there's ways to do that and have it make sense, okay?
Can you talk to us about jumbo loans and things like that? I don't think
We
ever
can
touched
talk,
on
let's talk about jumbo. We're out of time today, but we'll talk about jumbo and HELOCs next week, okay?
that. 'Cause I get a lot of
Good,
questions.
thanks.
HELOC